The market is hitting records high, but most people, they don't feel richer. That's because most people are playing the wrong game. We're in the new economy now. AI is completely reshaping jobs. The cost of living is increasing, but people are chasing the same thing every cycle. Crypto, AI stocks, the next big opportunity. But the real wealth is built by strategies that have been completely ignored. That is what we're going to uncover today. You've been told this story, the story that wealth is built calmly and predictably. You need to save, you need to invest, and then wait. But we are in the new reality now. Things look strong on the surface, like tech stocks, the AI is promising and changing the underworld. But the underneath foundation is fragile. The careers are starting to feel very unstable. The cost of living is consistently increasing, and technology is moving faster than we all can catch up. That tension is what makes the wealth so hard. We see stories of overnight millionaires on the internet and we think that, well, it takes a genius to do that, or maybe that was a one lucky break that person got. But that is a convenient story. I'm going to get you off that hook. The real key to building wealth is not a secret. It is a roadmap proven by people like Ronald Read, a janitor who started to work in his town, and when he passed away, he had an $8 million fortune. He didn't give a huge income or stock tip, but he followed one simple habit relentlessly and consistently through decades of chaos and change. His story is not a fluke. It is a system. So what is that one thing that actually builds wealth? Well, it is, drum roll, spend less that you can make and consistently invest the difference. That is it. Now, here's the uncomfortable truth that a lot of people don't realize. Almost everyone knows this rule, but very few people follow long enough for it to actually work. And in today's world, that gap is getting wider and wider. We're moving into a system where working hard is not enough. No matter how much you do for your employer, you're going to make a marginal gain in that time. Ownership is what matters, and AI and technology is shifting the value towards people who own the assets, not just people who are earning the income. So the people who win, they're not the one that are chasing the next big thing. They're the one who are quietly turning their income into assets over and over again while everything around them becomes more uncertain. This habit is simple, but I know it's not easy to implement, especially now. Well, let's be honest, following simple rule feels impossible, but why does it feel that way? Well, three reasons. First, everything is becoming more expensive. The cost of living is still high and it continues to increase because of inflation and it's squeezing every gap that you need to fill between earnings and spending. Second, your job is less stable. AI is reshaping the workforce completely. Companies are betting on AI to do the work versus human and firing thousands of employees. Just like last month, Oracle fired 30,000 people. Third, the market is confusing. It is easier than ever to invest with all these apps and technology, but it's so much noise, so much hype. And just adding AI to the name, the companies are trying to boost their bottom line market and making it impossible to see what is real and what's not. Which makes a simple habit not just outdated, but it's even more important right now. Because the only thing that works when everything else becomes unpredictable, it is breakdowns into these three principles. Principle one, take your willpower out of the game, out of this equation. The people who succeed with this, they're not just more disciplined. They're more smarter because they build systems. They use the pay your first strategy. So before you pay your rent, your groceries, or pay a single dollar or anything else, a percentage of their income, usually 15 to 20%, is automatically sent from the paycheck straight into their investments. So the money is never going to hit your main account. You're not going to have it to spend it. You're not going to miss it. So you learn to live on whatever is going to be left. There is no painful decision every month. The decision was already made for you and doesn't matter where you put that money, like your 401k. We're going to talk about that later. Principle two, wealth today is not built in calm markets. It's built by staying consistently in chaotic ones. And as a matter of fact, taking advantage of the chaotic ones. People get paralyzed when a huge amount of market shift happens. They look at their budget and say, okay, well, now what do I do? Because I don't want to invest my lost money. And they try to sell in the panic market. The point is the habit. The millionaire janitors and teachers, they don't start with thousands of inheritance. They started what they already had and they did not stop. The steady rhythm of investing month over month through crashes, through booms, is what builds the fortune. Let's run the numbers for example. There are two friends, both 25-year-olds. Friend A starts investing $300 a month and never stops. Friend B waits until she becomes 35 and she's going to make more money. And now she starts investing $600 a month. Assuming 8% return, who has more money at 65? Well, you guessed it right. The friend A who started earlier with less ends up having a $1.05 million, and friends B who started later only has $825,000. That extra decade gave friend A $250,000 advantage. It is a mathematical proof that habit of investing is more powerful than the amount you start with. Your greatest asset is not high income, it is time. This leads to the third principle, compounding. It is where your investments earn return and those returns earn more return. So it's like a snowball effect, just like a dead snowball, and it becomes avalanche of wealth over decades. But this magic only works if you avoid the biggest threat, which is hype. Before it was crypto. At some point of time, it was .com. The story keeps changing. Now it's AI. The behavior should not change. You need to stick to that behavior. Ronald Reed, which I talked about earlier, he didn't just get $8 million by chasing the hype. He bought the shares in the companies and just held on to it. He reinvested his dividend and let it compounding for decades. So how do you use this system? Well, I shared the exact breakdown in my previous video, and that shows up on the screen. You can find the PDF framework in the link in the description below. 20 to 30% goes to eliminating high interest debt that you already have. 10 to 20% in a cash for stability. 50% in your core investments like 401k match, IRAs, ETFs. 5 to 10% in asymmetric upside like AI or energy. And 5 to 10% in investing in improving your earning by learning tools and leveraging AI agents. If you're realizing that this is actually possible, even in this crazy market, hit that subscribe button. We're going to break down and the no BS strategies for building wealth every single week. Okay, let me make this even more simpler for you. Here's a 3-step system for you to put your wealth on autopilot and get started today. Step 1, open the right type of brokerage account. Your money needs a place to grow, and opening an account in a company that doesn't have all the options is not good. So open an account that allows you to invest the money consistently like a Charles Schwab or similar, or put the match of your 401k employer. And it takes 15 minutes to do that. Step 2, set up an automatic transfer. This is the most critical step. Link your bank account to your investment account and set up the recurring transfer on your payday. Aim 15% of the income. And if you can only do 5%, just do 5%, but make it automatic. Step 3, invest it and simply adapt. So buying a low-cost broad market fund like that tracks S&P 500, like a VOO, this adapts to the economy by increasing your earning power. Learning AI tools to become more valuable at work is a step 4. Because the goal is to automate your investing and also automate the mundane tasks that you do every single day. Becoming wealthy is not about being smarter than everyone that's around you. It's not about the market finding the perfect timing, but it's about doing something very simple but very, very consistently in a world that keeps you pulling in the opposite direction every single day. The stories of the millionaires are not just fairy tales, they're actual roadmaps. They prove that the wealth is built by small and steady choices, not by home runs. Yes, you may want to have a home run maybe 2-3 times your entire earning time, but not every year. And if you want to know exactly what to buy, check out my next video that's showing up on the screen that shows a perfect combination of investment, and you can download the PDF framework in the link below.